Investors around the world dream of being able to retire early and live off passive income, but very few actually manage to achieve this goal. Why do so few investors achieve the goal of passive income? Because investors keep choosing the wrong products. They keep chasing the same few investment solutions, even when those solutions don't achieve the results that investors are looking for. Here's a recent example. In the middle of a global recession prompted by a once-in-a-century pandemic, most retail investors turned to the stock market. In an environment where people were losing their jobs and more than ever, they needed a reliable source of passive income, what did they do? They went all in on stocks during Wall Street's most volatile week ever. Rather than pursuing lesser-known investment strategies that would better suit their goals, first-time investors thought they would win big on the stock market, even though around 85% of professionally managed funds can't even manage to beat the market. ASIC reports the number of new investing accounts increased threefold, even though retail investors lost hundreds of millions of dollars throughout March of 2020. For many investors, their strategy doesn't align with their goal. So how should investors generate passive income? The answer is simple. Find an investment product that's actually designed to generate passive income. There are countless products in the fixed income category that most investors have never heard of because they are so focused on the same 3 or 4 investment types. Once investors understand what fixed income investments are and how they work, they can actually make an educated decision about the investment solutions that are best suited for their investment goals. What is a fixed income investment? A fixed income investment is one that provides investors their return in the form of a fixed periodic payment. There are many different types of fixed income investments. Government bonds are the most well known, but there are also corporate bonds, mutual funds, and ETFs which offer fixed income returns. Each fixed income investment will generate revenue in a different way and be exposed to different types of assets such as real estate, debt instruments, or bonds. They may be single asset or they may be diversified. Each one will have a different level of risk and accordingly a different level of return. But the commonality between all these investment types is that they offer investors a steady stream of income over the life of the investment. Fixed income products are especially popular in retirement portfolios for this reason. At Lion, we have a specific model designed for investors interested in generating fixed income via property development. In this model, investor capital is secured against residential real estate in the form of a development project. Real estate is typically a stable asset class that can withstand market volatility, which helps protect investor capital. This is particularly true for Australian real estate, as recent performance demonstrates. Our passive income model uses a fixed income structure to pay investors their returns, typically at a rate of 1% per month. So if you invested $100,000, you would receive 12 distributions of $1,000 throughout the year. To learn more about Lion's passive income investment solutions, visit the How to Invest page on our website.